All right, good morning, traders, and welcome to the Bookmap live trading webinar today with Scott Pulcini, a futures trader. We do it every Thursday, 10 a.m. We were very fortunate to be peeking over the shoulder of a professional, a veteran in the market. You may have heard about Scott, he will be taking live positions. They are in demo paper trading mode. We want to be very clear about some of the methods here. It is only for educational purposes. And you can see how Scott manages these trades in his mindset as well. So you know who Scott is, or you should look him up. He's got a very interesting backstory, and the amount of S&P E-mini volume he traded is incredible. He does offer mentorship and education. I'll put this into the chat for you. You can reach out to him. And then let's go through the disclosures here. This is important. So as soon as we're finished with this, we'll jump right in with Scott. General disclosure: all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Live trading is in simulation, demo, paper trading mode, and strictly for educational purposes. Live trading executed in simulation cannot accurately represent realistic trading performance. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security nor lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. All right. Thanks for that. Scott, you want to take it away, and we will share your screen there, and we'll get going here.
You got my screen?
Yes. All set to go.
Okay. All right. Well, not a lot going on here considering. You can see where we're sitting here in ES, kind of in the middle of no man's land. So these zones below here are from about a year and a half ago. Can't even see them on this. Actually, again, ES, kind of in the middle of no man's land. So these zones below here are from about a year and a half ago. Can't even see them on this. Actually, again, ES. Yeah. March of 21, and this one's, both of these are late March of 21. So, this zone here is basically balance on top of a bigger balance that we launched from, that led to this whole up move. So this zone's important, and then this is this is important too. So we talk about this all the time. The four important areas of charting, right? Tops and bottoms of balance areas, important. High volume nodes of balance areas, and that's where the most trade occurred in a balance area. And then directional conviction and buying and selling tails. Those are the areas that I pay attention to in my charting. I don't usually draw high volume nodes of balance areas just because I don't want, it just hurts my brain looking at so many different areas. But you know, if we do bust through here, this is a place that it could stall. Granted, you got to remember this is a year and a half ago, basically. So, but it still looks like, you know, it'll still respect these levels, as we'll see here. So this was respecting this. You saw that this white zone, right? That was that prior area, and then that turned out to be the bottom of this current balance right now that we broke down from yesterday, right? So you can see this was, you know, first time down here, this was relevant, stopped, directional conviction. Came back down here again, stopped, directional conviction. Then yesterday, once we got through it, this is just basic trading where support, we bust through it, is now resistance, right? So you can see we're way down here. So this is kind of no man's land. I'll still take trades here, but the best places to trade are in these important zones, right? I can actually make a zone here because that led to this directional conviction as well, which I probably do, but I don't have to worry about that right now. What I want to see is, you know, again, this is what's probably going to happen here, especially because it's so quiet right now. I can see us building a balance for the next few hours and then either breaking up into this or breaking down into this. But you can see yesterday, once we finally got through this thing, And then we gapped down overnight, right? And then we did the initial breakdown. We came back and we put in the selling tail right here. That was bearish. We were talking about this yesterday afternoon on my trade room, and that was bearish, and then led to this, right? So right now we're just middle of nowhere in ES. There was a signal. This was a zone. This was pre-market. I'm actually about to delete it. This wasn't even 700. It was like, so my thresholds for icebergs and ES to have a tradable area is 700. So this was 682 and it was pre-market, right? And you can see we're kind of still respecting it. I guess I'll leave it in for right now, but I'm not going to trade off of it. I'm going to wait for something new, and there's been absolutely nothing since they opened. So look at our little waterboarding over here, and then Nasdaq just getting smushed. Let's see here, same type of look. It's exactly the same as far as current stuff, right? We had balance. We launched out of here a couple times, and then when we finally broke, we retested it. So again, if you just wait for these types of areas, these are the best trades, and then you wait for your real-time volume setup, and that's where you're going to get a trade. The places you don't want to be trading, so say we're still in here, you don't want to be initiating trades in the middle of balance areas, because that's where it's choppy and no one's really taking, guys are just placing bets, but no one's really caught, right? The longs are feeling okay, the shorts are feeling okay. When we break out of here, that's when the longs say, oh no, I'm wrong, and then puke it out, right? So whoever is holding their breath and held through this down move overnight, they're praying it comes back to this area so they can get out of their trade, and a lot of times that is the next wave lower, right? So that's why if and when we come back here, if we don't go straight to zero today, this is going to be a very good area to trade. This zone will be a good area to trade as far as support as well. But again, this is a zone from about a year and a half ago. So the best places to trade these zones are when you get straight moves into them, right? So if this just turns around and rips straight here, this is going to be an awesome short, because you got to remember all the energy is spent getting up to the zone, and we know this important zone. So you got to be careful with these zones. I was explaining this yesterday as well, right? So this zone is important. When we came down here, so we built these little tails here, and then we came down. First time down here, yeah, that's a decent place to trade this zone, right? But if we keep sitting right here. So say for instance, this is a bad example, but say we had this zone and then we built balance. Actually, yes, was a good example. Let me see here. So I was explaining this yesterday. You build balance. I guess this isn't that one either. Above the zone. Well, now when you move into the zone, this isn't as obviously strong as the first couple times, because now you have all these committed traders here. So do you want to be buying when you're below all of this? No. So you've got to use this in context, right? But meaning you're not going to just blindly buy the zone when you're below all of this, right? It's a different story if you move straight into this zone type of thing, right? So this is the same thing going this way. This looks like it's headed up here. This is going to be an awesome short. If we get up here and we get a volume signal, that's going to be a great trade, right? So you sit here and you're patient. We have no choice because there's nothing firing off right now, so we really have to be patient. All right, so something did just fire off on gold. I'm not real excited about trading this market lately. That's been crushing me since the war. This and crude have not been very kind to me, but these are substantial stop runs I just fired off. We did get let's see, we got an ATR below here. This was 52-ish. 52, the bottom of this zone was 79. So that's 28 ticks. That was an ATR. The ATR is only 26.7. So we could take this trade. This is the conservative way to play these zones, right? 5-minute ATR below. That distinguishes this as a stop and hold, one of my 6 setups, right? So stop runs that actually held and pushed lower, at least a 5-minute ATR. Here's your retest. Failure, I will take a short in this market. I usually take, so we'll take a look at our little lugs, Ludwig levels, we call them. Where's my, I guess I don't have it rolling, sorry. So we're almost up to that zone. That's going to be a great place to short. But gold, I usually take these.
S&P Iceberg by ES 700 for contracts.
I'll come back here. I'm not thrilled about trading gold as it is, so we'll go back there because we finally got something in ES here. So you can see what's above here, correct? This is liquidity. This is another way to view larger size orders. I know this, you wouldn't think this is large size, but relatively it is, right? You can see the orders in the order book. So this is representing this stuff here, right? What we talk about every single day is this is not, you don't view this as resistance, meaning like, wow, look at all these sellers up here. I want to get short. No, it's the opposite. It means these guys, and the longer it's been in here, the more important it is. These guys want to get their fills. And these are the big players that can push the market eventually into their orders. So like I tell you guys every webinar, this is the game I used to play all day, every day when I was a large trader trading, 1,000 lots. I would put big orders up here and I would wait till I get my opening. I keep testing the waters, and then when I see there's no resistance, no sellers, I would step on the gas. Guys would, retail traders would see the flurry of buying and they would jump on my coattails and I'd run right into my offer and I'd be out. So this is the same kind of games these guys are playing. I mean, this is a spot gamma level, so I'm sure there's some options activity too. Regardless, this is an area, is a magnet. It's not resistance. So you newer peeps on here, you need to realize that, where you don't look at this and say it's resistance. It's actually a magnet. So this would be great if we can rip up here. Actually, let's draw this zone too before I forget. So you can see this buy ice right here. And I will trade either way right here, right? This is not, again, this isn't the best area to trade as far as certainty, but the real-time volume is telling you, you can see this white line, somebody is buying almost 1,000 contracts here, right? Hidden orders. Icebergs are hidden orders in the order book. I may have to expand that. Let's just get this blue. Seeing what came in here. This was 400. So again, this is not threshold for me. And so I don't draw a zone on that. That is not a market moving event. And this is all based on my experience of watching thousands of these setups to know what kind of volume it has an effect on the market, right? That's the one fallacy trader, when they get this thing, when they get this SI indicator on their charts, every spike in they're trading off of that, right? You want to wait for significant volume. So this is significant volume. This is not, right? So we have that zone. So we're already, let's see this ATR here. That's up to almost 15. So 14 3/4 because I round up. It was 14.53. So the bottom of the zone was 25. We got down. So this is not a full ATR yet, right? So we don't know what this setup is. So with icebergs, there's two distinct setups. It's either a Titanic setup where the buy ice comes in and it holds the market and it goes higher, or broken ice where someone comes in and tries.
Stop by CL 343 contracts.
They're going to suck me into trading today. That's significant. Or somebody takes a stand, the big money takes a stand and they're wrong, and that's called broken ice, right? The way I determine that is with a 5-minute ATR move out of the zone, right? So this did not get a full ATR out of here, so we still don't know, is this going to hold up and go higher, or is this going to fail, right? So I got to wait for an ATR out of here to determine that. So we'll let them play their games. And remember, guys, paper is not always right. They are the big players. They do run the show, but there's other big players in there too sometimes, right? So yeah, this is significant, and it, especially for a day like today when where nothing's going on, this will probably hold and we'll move higher. But if they're wrong, then that's also giving you some kind of indication of where we're going, right? So we will see here. This trades down to, I say 25 quarter. This trades down to basically 10 quarter. That's a full ATR, and this will be considered broken ice, right? So if we get 10 quarter, then I'll wait for ATR retest failure, and then I'll go short. Let's just see where we're at in the lugs first, and then we'll go see what's going on in crude. So I trade aggressively if we're above the yellow lug. This is the directional yellow lug, very important as far as determining the sentiment in the market. So that sell ice is right, or that buy ice is right here, right? So if I'm going to short this, I need to see full ATR, retest, fail, then I'll go short. On the buy side, if this does hold, I will take this long aggressively, meaning 90% of an ATR because we're above the yellow lug. And I think we can make a move up into these areas that we talked about where that zone is. So I'm just sit here and I let this determine what we're going to do. Got down to 12. That's still not a full ATR. ATR is it's up to 15. So we need to see at least 10 for it to be a full ATR. So if it turns into a full ATR, I wait for the retest. I'll wait for the retest failure. Sure. Does that mean it's always going to retest? No. I'd say 85% of the time, 80 to 85% of the time, it will retest. Am I risking possibly just having it do that? Absolutely, especially in this market condition. But those are my rules from watching so many of these that, especially using the Ludwig levels and everything else, where I demand a retest failure if I'm going to short if we're above the yellow lug, right? So watching that, now they're going to suck me into crude. This market has not been easy trades since the war started. But if you get significant buying like this is, and I think this is an important zone, and it is, we'll go over that here in a second. This could be an important fade, or not an important fade, but this is an important zone, and I will fade it here. I'll show you why, if this can't move higher, right? So here's your stop run. Let's make sure we got all the prices, and remember, get your little crosshair guy here, and make sure you cover all the prices that happen in this spike, right? And so it looks like we got those, and you can see it on chart as well, which is very helpful. So this is our zone. So it's just sitting in here right now. That's step one. We want to see what the ATR is. It's a sweet 50 ticks. That's not fun to trade, but so we talk about this every single time, right? Like guys want to just put on trades where they only risk, I want to risk 10 ticks to make 20. Guys, the ATR is 50. That is the dynamic volatility in this market. If you're putting on a trade anywhere, so say you're like, okay, I'll wait for the zone. Once we break out of here, I'm going to get in and I'm only going to risk 10 ticks. You have about a 99% chance of getting stopped out, risking 10 ticks when the ATR is 50, right? So, guys that come in my room and watching these webinars, they're like, "Oh, that's too much risk. That's not good risk reward." I am adapting to the size of the zone and the current volatility. So when I put a trade on, I want to see it far enough away so I can determine what this is, what kind of setup this is. And when I put my stop in, I want to make sure I'm not getting stopped out on noise. In 85 to 90% of market action is noise. It's algorithm, right? So why am I going to short this and then just put my stop right in the middle of the zone only because I don't want to risk more than 20, 30 ticks or whatever it is? That makes no sense, and you're going to get stopped out most of the time. So if you're going to trade using this this philosophy, and it's not a philosophy, it's what's going on in the market, you've got to place your stops away from the area. And I use ATR to determine that. I usually go about 90% of an ATR. So if we put this trade on, you'll see what I'm talking about. But you've got to, if you're risking more, you've just got to cut down your size. You can't just say you normally trade a 3 lot in crude. Well, if the ATR is 50, you can't put on 3. If your account size is 20 grand, right, you can lose 5 grand on the trade. So you got to adjust your size based on the volatility. That's a long-winded answer for that. So let's see where we're at. Here you can see this is a very, very important zone. We were talking about this yesterday as well. This is where, so first of all, this is balance, right? These are traders placing bets. Right? Longs didn't do so well, did they? No. How about a $10 move? That's significant. So this is the epitome of directional conviction, right? It all started right in this zone. And you can see where we're at right now with a stop run. So if this stop run fails, stop runs are not real buying. It's guys puking. So if this stop run fails, this is going to be, and this is an excellent area to take a trade, right? If it holds, we could go long. It's still not going to be through this zone though entirely. So I'm a little wary of getting long into this because remember when balance areas break down, you can retest the bottom and go or the high volume node. So if this does hold, we could make it to the high volume node, but this market is still in a short term or intermediate term bearish state, right? So you've got to give the benefit of the doubt to that until we can overtake this high volume node. Then you can look for long. So right now, my preferred trade is the short side, especially into this first zone where this whole disaster started. Just got some more S&P guys. I'll come back to that. Still on the zone. Did we get an ATR below there? No. So now you got.
S&P stock by ES 569 contracts.
Right, so we're on our way to that liquidity. Now you have sell ice in here taking a stand. That's threshold. There's actually a couple different waves of it. So the way you want to do this, right, is pretty much right where this first zone was. But this is the most recent stuff, right? So this looks like a double whammy, a delayed double whammy, meaning sell ice, and then you have buy stops. It's not really into the sell ice, but my point is I'm going to make a new zone here because this is right where the old zone was. So you got 622, that was almost threshold on its own. Then you got another 300. Then you got another 300. Then you got another 750. Now you got another 500. So you're looking at 2,500 icebergs. This is going to be a large zone, but it is what it is. This is just like the volatility, right? I can't wish it to be a smaller zone. This is what is going on. So you have to draw your zone this large if you want to be accurate in what the real-time volume is doing. And shockingly, I know you guys can't believe this, we're going right into that liquidity. Like I said, it's a magnet. It's not resistance, it's a magnet. The longer it's been in here, the more of a magnet it is. And you get this many times too. We talk about this all the time. First time up here, algos pick this up and they try to run it away, right? Because like, you know, if I dropped in a 500 lot offer in this market right now, this exact same thing would happen. The algos pick it up, sense it, and then they run it away, trying to make me chase it down, right? They don't know, they can't distinguish, you know, how long this has been in here. I'm pretty sure, right? So they don't know first time up here. This guy's obviously not going to chase anything, right? Whoever this is not chasing. This has been in here all morning, all night, all morning. They're just going to let it sit. So what I'm saying is, say you got long down here, and you're like, well, I'm going to hold it to this liquidity. You got the first fill, and second fill, you're like, the minute you see this start to run away, I would get out because the algos front run liquidity the first time. This is still going to get filled eventually, right? It could be right now. But my point is, if you don't feel like going through this torment, when it gets up to liquidity and starts to run away, I would get out of some of your position because it may go. We saw a trade yesterday in Nasdaq. I'll show you here quickly. In my trade room. Just to show you how important this is in all the markets. Right here. So I was short yesterday afternoon. We came down here. We had liquidity. And it was pretty close to a spot gamma level 2. And the minute this thing started to turn around, you can't really see it here, but there were blue bubbles at the time. I got out and it turned around and it ripped 150 points up. Then it came back and filled it, right? But the point is, if you don't feel like going through this, be very careful when we get to liquidity the first time because algos will front run that market. All right, so let's get this rest of this drawn here. Any questions, Bruce?
Yes. Hold on just a minute.
All right, I'm gonna just clear out these. Start over here.
All right, so Brian in YouTube is asking here about, and guys, yeah, thanks for coming to the YouTube stream here. If you like these videos, please give us a thumbs up in there, and that really helps us and helps us continue on these webinars. All right, so Brian's asking about how do you keep all these things together. You're looking at so many different things and so many different factors during and your trading. So yeah, is it just superior?
I didn't hear that.
How do you
Say that one more time, 'cause
how do you kind of manage it with your thoughts? Because there's a lot going on.
How do I manage my thoughts?
Well,
Not very well
I mean,
most times, but
basically, I mean, like, you know what I mean? Like, there's a lot of things to look at here, and you're trading live, and you're also doing this presentation. Is challenging.
right. Well, it's absolutely challenging. I mean, and I'm watching 15 different markets too, right? Some people don't have the bandwidth to watch that many markets, but you need to be watching more than one market. We talk about this all the time as well, right? Because when one market sucks, you don't have to be forcing trades. You can move to another market. And with this SI indicator, you always know what's active, right? Between the SI indicator and if you guys have Tick Strike, or again, this is on my website, you get discounts to all this stuff on my website, but Tick Strike is very good to know when other markets are firing off. This is how I originally used this thing back in the day. I would have because you can't watch everything at one time. And, now we have the SI indicator that alerts me as well. But, 5 years ago, or 7 years ago, I wouldn't know if something was happening in the market unless I was staring right at it. Well, this will give you the audio alert. So that helps me. But, that's why pre-market, you've got to have your areas, and you just got to know where we're at, right? So, I mean, it's not that difficult in the bigger picture stuff, right? It doesn't change much. So in the morning, I just run through my, before I get on my morning webinar on my trade room, I run through all the markets and I say, okay, where are we at? Okay, yeah, we're here. I'm really interested in this prior zone. So I just have that in the back of my mind, right? So that's all I can really tell you. You gotta, like I said, I understand a lot of people don't have the bandwidth to watch 15 markets, but you can probably watch 3 to 5 pretty effectively and just know the longer term areas. So I just know this area is really, really important in crude. We've been talking about that for days, right? Because it started this huge move. So I know that. I know the area in ES. Of course, I lost my chart like I always do. All right, gold's just being gold. That's the last thing I really want to trade right now. So look where we just touched. I mean, this is why you want to know these areas, right? I already knew this, and we came right there. Now we're starting to put in a selling tail, so we know there's volume here, so this is probably going to be a good short. But other than that, let me just draw this real quick. I just want to make sure I have all this volume in here.
I mean, if I can help with the answer on that, I mean, it's a great question, and it is challenging. But I love the way that Scott's been using the alerts, and there's one right there. So,
right.
and that allows him to look at 15 markets because he's waiting for a big event. And he's waiting for a Stops and Iceberg event. He's getting, there's also a text alert, but there's also an audio alert. And then he'll jump to that market. And then he'll look at the order flow in that market. So, yeah, the alerts,
right,
the alerts
the whole
help
thing,
tremendously.
I know it seems confusing. Right. Well, that's the key, right? So I know my areas, but I'm not just trading an area as awesome like as this crude area is. I'm just not blindly trading, and what a lot of traders are. Most traders are because. Serious, if I lose one more chart, I'm gonna lose it. Hold on. Just don't know where this stuff goes. Oh. Here's swim again. You get what you pay for, which is basically free. I can't find. Here we go. Oh, that's annoying. So most traders, all they have to trade off of is this stuff, right? And this is not hard to distinguish. This is an important area. So guys just blindly short in here. Well, I'm not shorting until I get a bearish volume setup, because that is the key to trading. The absolute number one important metric that you can be using in your trading is real-time volume, because this is what drives the market. It's not price, it's not prior zones, it's prior zones if the volume agrees in that area. So to your question, how do I keep track of everything? Well, I'm basically just sitting here until I hear a volume setup. Then I go, I mean, again, I know you should always know bigger picture where you're at, but then I'll go over there and I'll look at all my stuff. I'll look at, okay, here's like this right here, right? This is turning out, this is a bullish setup now, I believe, right? So this was, again, I didn't want it to be, I wanted it to be bearish, but it's telling me something. This is a perfect example, right? How many guys just shorted this market into this area that are using bar charts? Again, this is easy to see. They're like, hey, we're right here, I'm going to short it. They have no idea, if they're not using Bookmap, there was a stop run, and that stop run is now turned into a stop and hold. What's a stop and hold? It's when you get the buy stop puke, which isn't real buying, it's just guys puking, but then the bigger money holds it up and pushes it higher. They have no idea this is happening. So this short, they're like, oh crap. I mean, they probably shorted it down here. They're already 60, 70 ticks in the hole, right? I didn't short it because my volume setup didn't say to short it. Do you see the difference? So yes, you want to know where you are bigger picture, but this is the key. So back to your original question, I keep it all together because I'm just waiting for setups. And then when I get my volume set up, then I can determine, okay, is this a bullish or bearish setup? And I trade off of that. And if it's in an important zone, it turns into an A plus trade, right? So this ATR is 49. We definitely got 49. Again, this was 46, 106, 47-ish. This got up to 97 would have been an ATR. We got above there. We got up to 12. So this is an official ATR. This is an official stop and hold. So what will I do here? I'm not very excited about it because I think this zone still may hold to the downside, but volume is telling me something different. This is the king. This is telling me this. If this was a bearish zone, this would have not gone higher. This would have held and done that and become a dumb and dumber. Dumb and dumber is a puke, go the other way. That didn't happen. So my volume's telling me I need to go long. And hey, look what's up here. I wonder where we're going, right? So now if we get retest failure, I will go long. And I will watch very closely this liquidity up here because that could be the end of the move, but we'll see. So here we come. Again, 80% or more of the time, even higher in crude, you get your volume event, it will retest it, and then it'll go, right? So you don't have to chase the market. There's certain times you want to, I do, but in this instance, I will wait for a retest failure. Actually, I should have been, so I don't want to confuse you guys, right? But in a normal circumstance, say we were just in a nowhere on the chart, right? Well, I would be taking that, actually I take that back because we're at the red lug. So this is going to be kind of confusing for you guys, but say we were down here, we were in the middle of a balance, no significant zone, and we were just above the blue lug. Well, if I got that stop run, I would be in aggressively, meaning 90% of an ATR right when we break out of there because we're above the yellow lug. This is a different situation. One, we're in an important zone. Two, this is an area that this can fail. So I'm actually kind of afraid to go long here. One, I don't go long into the red lug. I wait for us to build new lugs. So I'm definitely not going to go long until we build new lugs. This is just a different situation, so please don't get confused. Red and blue are the strongest of the Ludwig levels. They're ridiculously strong. So I do not buy into the red lug. I don't short into the blue lug. They make new lugs all the time. I wait for the new lugs, and then I can initiate trades, right? And it has to have the conditions, whatever her conditions are that she's come up with. Again, I think the trading guys have spoken to her to come up with this stuff. But you see, like here. So I wouldn't go long until we built new lugs. Then with the setup, then I'll go long. You see what I'm saying? So right here, that's why it's kind of a bummer that we did go a full ATR above this zone, because this would have been even a better area to trade. We have the red lug, we have that zone. That's why this is a major bummer that this has confirmed itself as a stop and hold. So this is no longer a short setup. If we would not got a full ATR above there, then I would have shorted this. But I can't do it now. And I'm not going long because we're at the red lug. So this is a no-go for me right now. It's just, like I said, a bummer. If this would have held and done that, that would have been an A plus trade. It still could do that, But my rules, guys, you have to have rules. You can't one time do one thing, another time do another. Is that what the algos do? No, the algos that take everybody's money, that are 80 to 90% of the trade, have certain specific rules that they follow every time. They don't say, well, the red lug's here, but I'm going to buy it anyway. No, they say, I don't buy into the red. We don't buy into the red lug. I'm just giving you an example, right? That's what my algo is. So this is a no-go trade for me. I would have shorted it if we didn't get a full ATR above this area. Now, if something new comes in, absolutely I'll short it, right? But as of right now, I'm not trading this setup. Hopefully that's not confusing. I'm sure it's confusing to some people that haven't watched any of my webinars, but we'll find another example where it's not so confusing with all these different conflicting ideas. All right, so let's keep an eye on here. So we definitely did not get an ATR above this huge ice zone. So this is big sell ice in an important area, right? And we're putting in a tail. Granted, this is now early bar. It could go back and fill this and not be a tail, right? But as of right now, it touched that. That's telling me that we're not bullish. If this is bullish, it would have ripped right through here. So now what we do is check out our lugs. We are above the yellow lug, and we're just retesting. We're retesting yellow now. The other thing that you want to pay attention to too. So if you're going to buy, be very careful at buying an extreme standard deviation of VWAP, because this is the algos. This is their bread and butter, right? There's so many algos that play reversion of the mean, and if there's no big money pushing the market through there, especially if it's sell ice. So say there's, if you're not seeing anything here. We saw something and it was sell ice, but I'm saying if you don't see anything, be very careful initiating longs when you get 2 standard deviations or more away from VWAP if there's no big volume coming through, because you get the reversion to the mean. It's exactly what just happened there. How do you know if big money's coming through? Well, you have your SI indicator, but you also want to pay attention to relative volume. And you can see here, this relative volume is not impressive, right? It's not horrible. So this is a relative volume chart that shows you the exact time period, 5-minute time period for the last 30 days. So we are barely over normal for this exact 9:35 time period for the last 30 days. When you get that, when you don't have the big, like this kind of trade, that's where you get the rejection, right? That's when the algos pop in. So what I'm just saying, overall, be very careful going long if there's not big money coming through. So we are just sitting in this zone. So again, I'd much rather short this thing. And this is how you should actually be trading this. You should demand certain things to happen for you to be long. This is still, first of all, we know this market's getting killed, and this is just beginning, I think, right? So I've been saying that for how long. But this is not a good place to take longs. You are still below. This is just basically the first retest of this area, the bottom of this balance area. Any trader that held their breath and were overnight, like I was saying earlier, and it comes back here, they are bailing out of this trade, which moves to this. So this is a very likely, and again, you're never going to know what these icebergs are doing, why they're doing it, but this is very likely some big money that was long that is now getting the hell out as we come back up here, right? You're never going to know, guys. Like, stop confusing yourself trying to understand what this is. They could be hedging option position. They could be getting out of longs. It doesn't matter. It's the area that's important, because all these traders that were all gung ho right here with the blue bubbles, these are market orders, just ran into a mouthful of sell ice. That's what's important, the area. Right? That's what we're trading off of. You're never going to know why they're doing what they're doing. And you don't need to know. You need to know this is the area to trade. Whatever way we break from here is most likely going to be the big move, because of all the committed traders in this area here and now. And once again, if you don't have this information, you have no idea what's going on in here. Yes, bar chart wise, this looked like a great short, right? Hey, we're returning here. We broke down from balance. Here's your return. Yeah, I'm going to go short there. The guys that are shorting it are like, yeah, this is working. But they don't really know why it's working. If this breaks down out of here, the reason it worked is because these buyers just ran into 1,500, 2,000 icebergs, sell icebergs. That's why it worked. It didn't work because the zone's magical or the prices are magical, right? I see all the time all these services out there. Watch these prices, this price, this price, this price. Okay, yeah, that's great. Those are probably relevant prices, but they're not relevant unless there's real-time volume there, right? I just hope I can get through to you guys. Some guys
Yeah,
just
that
cannot
that
grasp
is
that.
such an important point. Like the levels are levels, but what is the order flow around those levels?
Because that's the driver of the market. That
Exactly.
right. It's like I can't. I went on this. I went on this tangent yesterday. Right. It's like this is what drives markets. And actually traded, not just resting. The traded volume is what drives markets, not price, volume. This drives this, not the other way around. Yeah, when price gets to a certain point, then yeah, volume will come in. But my point is, this is what's important, guys. And if you don't have this, you don't have all the information. I say it all day, every day. It's the most powerful thing in trading. I've said it over 300 webinars, I think. So we're just going to sit here and wait and see what happens in here. There's nothing else to do. Crude's bouncing off this again. This, if this was in a vacuum, I would 100% be going long here. You got full ATR, you got a retest. Now you're getting your failure. There's liquidity up here. This looks like a decent long. There's too many things against this trade for me to take it right now. So I'm not taking it, especially in this market that just has eaten my lunch since the war. Every 5 minutes there's a headline, right? So, but in a vacuum, this is the setup. Like, thousands of these I've seen. Full ATR, here's your retest. I would go long 90% of an ATR out of there and then, get out at important areas. But again, I'm not doing that until we can build new lugs. So we have a red lug here, and like I said, this is a very, very important area where where I don't want to take a long right now. We got the red lug, and this is the first return to the bottom of this balance area, and we're at $10 move started. Yeah, no thanks. I'm not going long. Now, where you change your story is if this can rally up, if it can get through this high volume node, where this is right here. This was also directional conviction. This is actually what started this whole thing. This was the gap down, and then you had the daily trade. This is a regular trading hours chart. So gaps are directional conviction. So the real directional conviction that started this entire thing is up here at the high volume node. So we could get up there, but what I'm saying is you don't want to be looking. The bigger picture long for you wanting to be long. You got to clear this high volume node, and then you can look for longs. Other than that, you're very likely to fail. All right, a lot of talking with no trading. Grains, be careful if you're trading grains right now. The grain number is coming out at 11 o'clock Central. So I would not touch grains until that comes out because you can see, 60-cent, 70-cent moves in grains. So I'm sure there's nothing going on here. I haven't heard anything, but so we talk about all the time as well. You should have. I get asked this all the time. What market should I be watching besides equities? Because I say watch 3 to 5 markets in case the equities suck, kind of like they do right now. You're not forcing trades. Soybeans, and we've been talking about this the last few weeks. Natural gas. This market is just insanity, and you can see, I know we go over this stuff every week, but there's always new people on here, right? So I like to reiterate important stuff. When you look at a market and you see it looks like a Christmas tree, this is the most algo-ridden market out there by far, and you can see it, right? All this is the Christmas tree are algos putting in orders and pulling them, right? And then it looks like that. So you may be saying, well, why would I want to trade an algo-ridden market? It's because algo's worst enemy is the big money that disrupts their game, right? So when the big money comes in, it throws off their game and they either shut them off or they get run over. So when you get a volume set up in here, it is, especially when it's large, it is golden, and you will see 300, 400, 500 tick moves like all the time. So this is a market where you really want to pay attention. So my thresholds in here, I got 150 as my thresholds in here. If you can get over 200 on stops or icebergs, that's pretty golden, and you're gonna get a big move. Right? This wasn't quite threshold, but you can see here, it still respected it. Right? Here's this. This was a double whammy, broken double whammy actually. You had buy stops into sell ice. That was this area. You can see we moved away. Here's your retest. Here's your failure. So nothing in here so far today, but the two markets I recommend you watch, natural gas and soybeans. And they have many micro products for those two. It's not quite micro. NG, I think it's QG. It's a quarter of the value of a tick. And then you can trade they have a mini soybeans too. I forgot the symbol, but you can look those up if you don't want to trade the full size. All right, so a whole lot of nothing going on right now. I mean, literally sitting in the zone in gold, nothing happened. Actually, let's see. Did we get the ATR below here? Yeah, we determined that, right? So I'm gonna actually, I forgot about this trade. So let's see where we are in bigger picture. It's a very important area. Not very important, but short-term stuff. What happened here? Tell me what happened here, Bruce, that you see as important. Because I can't put people on the spot like I do in my room. What do you see here? Why do I have this zone drawn?
Well, that's where it broke out from.
Right, so you can see it's kind of easy because I'm trying to draw the zones and stop it where it started, right? So directional conviction. This is overnight stuff. Again, this shaded is overnight, but still important. That led to a big move. Then we came down, buying tail, more directional conviction, and look where we're at right now. This is a very good area to trade this setup. And we've already determined we got below a full ATR below that zone. So if this comes back, retest fails, this is going to be a good short, and we're probably coming down a minimum this thing, and this thing is already in a bearish state, right? So again, the best trades are in these areas when you get your volume set up, and that's exactly what we have. What should have happened here? Well, if it was going to be, it's been support the last two times, right? It's led to directional conviction higher last two times. Well, then why did we get the sell stops that aren't real selling? It's just guys speaking. Well, why did it push down a full ATR below there? That's telling me, we just got to make sure this didn't get a full ATR above here too. Let's see. 25, close, or 26, but it did not. So this is still considered a bearish setup. But my point is, if this was truly a buy zone support again, you got the selling that's not real, so that tells me, okay, there's no real sellers yet, but why do we push full ATR below there? That's how I determine what kind of setup it is. So that's kind of tipping you off that something's wrong here. One, this should have just went like this, puke, hold, go, right? If this zone was support like it should be. That didn't happen. And we got an ATR below there, and now we're coming back again. So if this gets back down here, I'm going to short it. So the way I do this is ATR is 26.7, so we've already retested the zone ATR retest, so 26.7, and out of that is 24.03, which is the 24 ticks. So 24 ticks below here, I will short this market. So the zone's at 79, right? So that's 55. Last two digits I'm talking is where I will short this market. So now if I get filled on that, and you can see what's below here, where do you think we're going? Let's see. Black hole or magnets. So you factor, it doesn't mean we're going to go here right now, right? We can go up here, play games, and then finally, but my point is when you're coming up with your thesis of what's going on and you see liquidity all below and none above, the high likelihood we're coming down here, because remember, these are magnets. Look at this down here, 1,200 contracts. Whoever this is has the ability to push this market down here eventually, trust me. Right, so, but if this breaks higher and gets in a full ATR above here, then that's canceled and I wait for my next setup. But if I do get filled, then I'm going to go 24 ticks above this zone. So this is what I was talking about, guys. So 24 ticks below here. If I get filled, you got the size of the zone, which is another 23 ticks. Plus, I put my stop 90% of an ATR away from here because I demand that it can get back, show me it can get almost an ATR above this zone. I'm not going to get short here like most traders and say, I only want to risk 30 ticks here, so I'm going to put my stop right there. What is right here? It's nothing. The market doesn't care about what you want to lose. The market cares about this area. So that's why I get out of the area. Don't put your stops anywhere besides outside of the area. If not, you're going to get algoed and stopped out 99% of the time. All right. wait on that. Actually, what I'm going to do here is I'll put an alert so I know I get filled, because it's hard to see if I'm on the webinars. This is what it sounds like. Beautiful little
S&P
bells.
stock by ES 501 contracts.
All right, we broke out of that zone and now we got a new setup, so not sure we're still in the zone. But I'm going to draw this. This is threshold, right? My threshold for stops are 500. We had 468 and another 351, and that's represented right here, right? You can see it there. So I'm going to draw this zone, and then we'll determine what we're going to do here. You see, this was the 468, 267, but they're basically back to back, so I'm going to put them together. I already know this is an important resistance zone, right? So if this fails, this is telling me so many different things. We already know, again, I already talked about this. We know why this is an important zone. We're back here. This is where we had balance, directional conviction, then we broke down through it. You had more balance yesterday, selling tail. Now this is a return. Very likely it does that. And what's gonna be the main tell is, here's buying. Is this real buying, or is this guy's just puking? That's not real buying. So if this turns around and fails here, I already know the zone's important resistance. If there's no real buying to continue this up, we're going to do that. Right? This is an A+ area to be trading, especially the short side. All right, so there's your zone. We are above the yellow lug. This is the problem as far as aggressiveness, but we're back at what? And guys, guys and girls, you also want to pay attention to what the algos are doing that day. You already know we came into the 2 standard deviation the first time and they rejected it. So unless the relative volume is really increasing, there's a very good chance they're going to push it away again. Right? Kind of like down here. Here. So let's check out relative volume. It's nothing. And that's with 1,000 stops. It's still not even, it's barely normal. Now, do you think barely normal volume is going to be able to push through that important zone? I do not, right? So if this turns into a bearish setup, that's an A+ trade. I'm going to short this aggressively. I know we're above the yellow lug, but this is a situation where I want to be aggressive out of this zone. So, if you want to be conservative, then you wait for a full ATR. So ATR right now is a sweet 16.35. That's very volatile. But it is what it is. Do I wish it was a 3-point ATR? Absolutely. It's a 16-point ATR. I can't will what I want to happen out of the markets. I have to adapt to the markets. So if you want to be conservative with this area, you wait for 16.5 points below here. You wait for a retest, you wait for a fail, then you go short. I am going to go short aggressively 90% of an ATR, 16.35. 90% is 14.71, so 14.75 below here, I am going to short. I have to adjust my size because of the amount of risk that I'm taking on this trade. And again, you guys are out there, wow, that's ridiculous. He's going to be risking, because I'm going to be I'm going to go 14 points below here, and then my stop's going to be 14 points above there. Wow, he's risking plus the size of the zone. So I'm risking like 34 points on this trade. Yes, that's a lot. So you cut down your size. But that's what this market environment demands that I do. Do you guys get it? The market environment doesn't care that I want to put on a trade and risk 5 points to make 10. If I'm risking 5 points, what is this? If it's to say I get filled down here and I risk it, what is this area? It's nothing. This is the area that's important. Right? So I'm going to put this in. As long as we don't get a full ATR above here, this is a valid potential Dumb and Dumber setup. Again, one of my 6 setups. Volume setups. So the bottom of this is 31.25. So 15 is 16.25. 16.50, I can short this. And look, if this gets 15, 16 ticks. What's the ATR? 16,335. If it gets above there, then I change my tune. Then what you can do is trade retest failure this way. Hey, look what's getting filled, guys. You believe this? I can't believe that this liquidity is magnets. Now, I understand there's liquidity all the way up here, and we could go straight there. It wouldn't surprise me one bit. I'm not short yet, right? Do you see the difference? This is another example, just like crude. How many guys just shorted that are bar charters, awesome technical guys, right? You could be the best technical person out there. How many guys are just shorted right into the zone, like, because everything that we just talked about, right? And they're like, oh wait, they're still buying. What's going on here? Well, did I short into that zone? I want to short, but I'm waiting for the volume to qualify it. That didn't happen, so I'm not short. You see the difference if you have real-time volume versus trading off a bar chart or anything else, any other lines, the 300 lines most traders have on their chart, they don't mean anything unless there's real volume there. All right, you got some sell ice coming here. It's not threshold, so we'll wait here. Did that get 16 points above? This is 37.75. No, we got 8 points above there. So this is still technically can be a dumb, meaning the dumb money, retail, not retail too, don't get offended, but it's not the big money. Retail puke failure. That's what I'm banking on. What I'm going to do here, I didn't see this bottom of this. I'm going to put the stop just below this prior sell ice zone as well, because I don't want to stop right in the zone. So I'm just going to move this out a little more, make my risk even more, which is going to be delightful, but it is what it is. Why is this not moving for me? Alrighty, let's try this again. I don't know why this isn't, there we go. All right, so that's where I will enter that short. If we get a full ATR above here, then this is disqualified, kind of like we did with what was it, crude? I can't remember now. All right, any questions, Bruce? Actually, give me some questions. I'll be back in 1 second.
All right, let me see here. Siberian, the full ATR is based on the 5-minute chart.
Okay, I'm back.
NQ iceberg by NQ 164 contracts.
Yeah, natural Nick, just regarding the specifics on the MBO on certain symbols. That's what it's part of Scott's educational course. I'll put that in the chat if you're interested in that, or his trading room. You can get that information from him. We just got really tired of it. We got asked again and again and again, and really tired of posting that. So you'll have to reach out to Scott or go to his trading room basically, or get his course, which is in the Bookmap marketplace. And hold on, guys. Sorry, guys. I'm doing a lot of different kind of things here at the same moment and trying to get to your questions as well.
Oh, you got multiple things going on, Bruce? I feel really bad for you.
Yeah, I know. I'm not a superpower like you are.
You're in my world now, Grandma.
Yeah.
Movie?
No, don't know. I don't know.
Terrible. Somebody knows it. Somebody better know it, or I'm getting off the webinar.
All right. Well, there's the threat. So
nobody knows that.
Someone better.
You're in my world now, Grandma. Come on. And Stiller, Happy Gilmore. You guys that's just terrible. He brings his grandma to the home, and he closes the door, and he said, "You will go to sleep, or I will put you to sleep." How do you guys not know that movie?
I've never seen it.
You're in my world, my grandma.
I've never seen it.
I gotta say, it's hysterical. All right, so I combined these two zones. You had 161 here, that's the threshold by itself, and then you had another 130, so you got almost 300 in this area right here. This is Nasdaq. Let's see where we're at. We're almost there. We're not quite at this zone, but we are. This is an area where this could stop because I wanted this zone, and we still can get there, but if this does stop right here, this is a selling tail from yesterday. Tails are instant rejection. That's one of the 4 important areas of charting, right? Kind of like this one here, led to that. This could stop right here and come all the way back. We're gonna let, so again, if you're just trading off of the charts, you're like, this is a great area to short. I'm gonna short right here. Okay, well, you might be right. I'm gonna wait to see. Somebody's buying 300 contracts here. Hidden 300 contracts. So I want to see how it reacts to that zone to just determine if I'm going to go short. That's the difference. So ATR in here, it's only 70. That's not too bad. It's 70. That's crazy, guys. That's almost untradeable, right? So the way I trade, I'm basically, which is the, I think the proper way to trade this stuff, because I'm adapting to the dynamic volatility. I would have to get in. We'll just say 70 ticks or 70 points right now. 70 points for my entry. I'd have to risk 70 points above here plus the size of the zone. So I'm risking like 180 ticks, 180 points to put on a trade in Nasdaq right now. Yeah, no thanks. So, especially, if we if we got up here and I saw like 500, 600 ICE, then I would probably consider it because remember, that's the volatility. So if I'm risking 150 ticks, there's a very good chance that we're going to get a 300, 400, 500 point move, right? Because that's what the volatility is dictating. So yeah, you just got to cut down your size. And if you're trading normal product, normal size contracts, just trade micros and trade, 5 micros instead of, because you can't trade a half of a normal contract. But that also allows you to get out. We're not all in, all out. If you're only trading one E-mini or one Nasdaq, you're doing yourself a disservice because it's all or nothing when you get in, you get out, right? So you got to trade micros. There's nothing wrong with trading micros. Just trade 10 micros. Then you get out a half at a certain area or a third or whatever. Let's see what happens there. It still has not gotten an ATR above this zone, so I'm still not buying it. But it does. There are 2 more.
Crude Iceberg by CL, 150 contracts.
There are 2 more areas of liquidity here. This hasn't been in there that long, but you got 1 too. So they could fill both of these. But I'm telling you, we'll be just basically into that zone. I hope we go fill that because then I don't have to worry about the liquidity anymore. And then I'll short it with both hands, as they say. So we'll see what the bottom of that zone is. All right, so I chose not to go long crude, but that was a perfect setup. As far in a vacuum, right? There's your liquidity fill. But the red lug was there. Let's see if we have red lugs, and then new lugs, and then maybe I'll trade it now. But I needed to see new lugs. Where did I put that? Where was that?
Gold Ice Iceberg by GC, 151 contracts.
All right, everything's firing off at one time as usual. Let's see. Relative volume is still not that impressive in here, so I could see this not going much further. We'll see. Crude. Let's see if we got new lugs. Not yet. Oh, get back there. But again, this is how I trade it. These things are so powerful. This one busted through it so far. Doesn't mean it can't pause here, especially now that this liquidity got their fill, and that's about it, right? So this is a good example too, guys. This is not, I don't pay attention to this liquidity. These are algos screwing around with the market, kind of like we saw in natural gas pulling and putting them in. This is liquidity you want to pay attention to. That's been in there forever. And they finally just got their fill. So this could be the end of this move. Would not surprise me one bit. Into that important zone that we've talked about. Let's see what's going on here. We still, I don't think, got an ATR above this zone. Let's see. 38 quarter. 50, yeah. We're still inside an ATR. 5-minute ATR. ATR is 15.53. They're so close now. This is what I'm talking about. This is the game I used to play, right? I had my 1,000 lot in or whatever. And we got close enough that I would just start testing the waters. I buy a little, and there's no sellers, then I would just step on the gas. Guys would see this thing going with a flurry. They jump on the coattails like someone's buying big, and then it would run right into my offer, and I would be out of my trade, and then it would be free to do whatever it wanted to do. But this is close enough now. You're probably going to see one more swipe up. Would be my guess. But I'll still short this zone because we have not gotten a full ATR above this stop run. The minute we get a full if we get a full TR above this, then I'm going to cancel the short and wait for a new setup. And I have no problem missing this up move, right? It's like, I mean, from down here would have been all right. But anything in here, I'm not excited about going long this market. We've talked about this 20 times in this webinar alone. This is a prime area for this. I think this liquidity will get filled. Let's see where that's at. It's probably right at the top of this zone. Yeah, it's like right here, right in the middle of the zone. Or right at the top. So that will be back into this zone, back where the selling tail, liquidity gets to filled. I can totally see this market doing this. We get this all, guys, every time this market rallies for the last month, it gets whack-a-mole. Remember the game whack-a-mole? In the arcades where it pops its head up and you beat it down? Every single time. Rally, crush, rally, crush, rally, crush, rally, crush, rally, crush. And this is just another, and we're like 100%, I'm thinking this is what's going to happen. That's my thesis, right? If for some reason, somehow, some way, this can plow through, get through this high volume node right around 4,000, well, then I'll change my tune, at least intermediate term, short term, intermediate term for a buy signal, or I want to be long for the bigger move into this stuff. But this has got a long way to go. And again, every time it's done this is almost the exact type of size of the move too, right? Where it's stopped, gotten killed, stopped, gotten killed. That's what it's looking like it's going to happen here. 6 more points, the liquidity gets their fills. Look at that. This is, guys, it's just the same game over and over and over. And I know what you're saying. Well, why didn't you get long? You saw this. You could have. Again, liquidity doesn't always get filled right on the spot, too. So this could have done this, and then at the end of the day, come back, right? So I don't just trade. This is just one of the factors I look at as coming up with my thesis and or getting out. So if you were long down here, if this gets close to here and starts to turn away, I would be getting out, at least first time down. And then once they get their fill, if it can't hold this area, which I don't think it's going to, you want to get out. But if you got, now this isn't officially an ATR above here, right? So this is now disqualified as a short. So, but do you see what that just saved me? Did I just short blindly into that zone? No, I needed to see this volume setup be bearish, and it wasn't bearish. It's actually bullish now. So technically, if nothing else comes in,
Iceberg by GC, 150 contracts.
I'm going to cancel that gold order too. If nothing else comes in, you could play retest failure. In a vacuum, that's a great trade. I don't like that trade because of what we talked about this whole webinar, but the volume is telling you something different right now. You don't just ignore the volume.
S&P stopped by ES.
There you go.
762 contracts.
Exactly what I wanted. Liquidity filled, shockingly. Now a volume setup. This is exactly what I wanted to see, right? It's already rejecting it. So I'm going to short this aggressively like I was going to short that first stop run aggressively. We're at the top of the zone. ATR is 15.36. $13.82. So I round up 14 points below here is where I'll short this. This was at 59 quarter. So that's 45 quarter. That's where I will short this market. I'm going to go just below this spot gamma level. So you got to make adjustments sometimes and stuff like that. But I mean, you could short right there, but I'd try to go a little bit below, kind of like if it was a zone. Yes, I'm aware I'd be shorting right back into this zone, but this is just a stop run, right? And it's done. This is the new setup. Everything is lining here for this to be a short. But you see, I'm not just jumping in the trade. Here we're getting close to the red lug too. And so there's so many things lining up. We know the zone. I've showed you 20 times. We've got Here's VWAP. Here's one standard deviation, which they call daily value area. Here's 1.5. Here's 2. If I were to draw that, I just don't have it drawn. Here's 2.5. Right? There's so many things in favor of this short right here. If this area can hold. Once again, you see, I'm not just shorting blindly. You could be aggressive in the zone if you want. We talk about this every week too. This is the science. The art is how you trade them. The way I trade them is to prove that it can get away from here to short it. Right? From watching thousands of these. So you can say, you know what, Scott, you convinced me that there's enough going for this. I'm going to short right here and I'm going to risk above there. Right? So this is already looking like it's going to be a dumb and dumber. The dumb money puke. There's no real buying, pushing it higher. We know it's an important area. There's your rejection. And as you get better at these, right, and once you understand what's going on, like I said, you could have just shorted right the minute you heard this, you know this important zone, jump in. I do that sometimes at the red and blue lug, but I don't want to confuse you guys, especially the newer people on here, so I'm going to trade it like I normally do. All right. That's what you call instant rejection right there. And I only have 2 because that's all I can trade with this current volatility, right? Any questions, Bruce? Concerns?
Concerns is another matter, but let's see here.
So this is a bullish setup in Nasdaq. So I mean, potentially, right? Here's your ICE. Here's your ATR. Actually, I think that. Wait a second. Let's make sure. What is it? About 100 now. 70 points. So this was 83. So 84. No, I wasn't even an ATR. Right. We needed to get up to 54.
Just something here. Someone had mentioned about shortcuts, hotkeys in Bookmap. Scott, I don't know if you're aware of this, but we will be offering soon, probably in June sometime, a dome and with hotkeys, so for execution, and yeah, just will be coming out, a month and a half or something like that. So keep your eyes peeled, guys.
How about hotkeys for the drawing tools? That would be great. That would be great.
I've
I don't know
put
if
in the
have I ever
request.
talked about the drawing tools before?
I don't
The
recall.
1982 Atari.
Yeah.
I would seriously do backflips if you guys got hotkeys for the drawing, so I don't have to do this stuff. My whole day is spent drawing zone. Just
S&P Icebergs sell ES 700 contracts.
All right, so this is looking like a new setup. I'm still going to fill on this, but what I can do now, once I fill on this, is I can trail my stop based on the new setup, right? So I'm filled. This is 655. That's below threshold by a few, but I'm still going to draw this zone because it'll help me control my risk better now, right? Right. So we got short off of that stop run. Here's some sell ice, so I'm going to draw that zone quickly. Again, this is a little below threshold, but I'm willing to draw this because 1, there hasn't been big size coming in here today, and 2, now I can trail my risk based on this new setup, or my stop based on this new setup, right? I don't really like I shorted right in the middle of it, but I'm okay with it because I know this zone is important, so I want to be short. So now the top of this zone, this iceberg that just came in, is 51.5. Your ATR is still, let's make sure it's correct, 15.37. So that's 14 points above here is 90%. So now instead of having my stop 14 points above the stop zone, now I can move it 14 points above this. So 14 points puts me at 65.25, and that'll put me just outside that stop zone as well. I like that area. I like that. So you see, my normal stop, if I was trading just off this where I just got long, I would have had to put my stop 14 points above here. Well, that would have put me at 76. So now I just was able to pull my risk in 10 points because of the new setup, right? And what I can do is add to this trade now based on this new setup. As long as it doesn't come and stop me out, I could short this. So this one I'm not going to be aggressive because I was aggressive on the first one, and we're still above the yellow lug, and we're not near the red lug anymore. So I'm not going to be aggressive with this one. Meaning, so if I'm going to add to this trade now, I want to see full ATR. So 15.5 points, retest failure. I'm in at 14 points. My stop's going to go in the same exact spot. So let's see if we get that. So guys, I mean, this is what I was saying I was so excited for. And you could have just...
S&P Iceberg by ES, 702 contracts.
All right, so now here comes another setup. So what I'm going to do is I'm going to clear out some of these because this is old news, and we got something new coming in. I'd leave them in if it wasn't... so this confusing myself. All right, so now you got buy ice here. Let's see, this looks like a lot.
S&P Iceberg by ES, 700 contracts.
All right, so you can see here now, got 1,400 buy ice. So what do I do? What I'm going to do here now is I'm actually going to delete this zone because it wasn't even threshold, right? I was going to use this to trail my stop, and now I can trail my stop on this setup, and this is significant, right? This is 1,400. No question about threshold here. My threshold is 700. This is double threshold. So you got that. And remember, you want to incorporate all the prices in that zone. Boy, a hotkey would be great for this. I don't know if I mentioned that. That, and then that, and then that. Guys, I know it's annoying to watch, but it's even more annoying to do it all day, every day. So there you go. There's your zone. So now what can I do? Top of the zone is at 42.5. We've already determined my ATR is moved up a little bit to 15.73. That's still going to be 14 points. So 42.5 or 42 quarter, 14 points from here puts me at 56 quarter. So now there's another 10 points I just saved myself if I do get stepped out. Move this down to 56 quarter. That was close. And now what I can do is add to this setup. If stuff keeps coming in, then I just gotta keep drawing zones. That is what it is. Like I said, just like the volatility, everything else. It is what it is. Do I want to see buy ice keep coming in as this moves down? No, I want to see this thing flush to zero, right? But I can't. If a new setup comes in, I've got to adjust to it. I'm not going to ignore a setup because I want something to happen, right? So anyway, I'll still wait for 14 points, or I'm sorry, 15 3/4 points. That's the current ATR. Retest failure, add to this trade. And then my stop will go in the same spot. So we were able to trail the stop 3 times now, or 2 times on that first ice that I deleted because it wasn't quite threshold, but this is definitely threshold, and there you can see the stop trail down. I didn't even put the first one in. The first one was going to be up here, an ATR above this zone, or 90%. But like I was saying, as you get better and you understand these, you don't have to trade like I trade these guys. Like, you could say, there is enough going for this trade right here. And I should have put on a couple. I just don't want to confuse you guys. In my trade room, I trade a little more aggressively. Like I said, this was a primo spot to short that. We were extreme standard deviation, 2.5 standard deviation away from VWAP, algos, close to the red lug, that hugely important zone, and a setup. You could get in the second you hear him say buy stops, you're in. And then just literally just hop in right here, or wait for it to break below and then put your stop, above, make sure you get enough above this zone. You don't have to wait for 14 points out of here, right? I would not give you verbal lashing if you did that in important areas. You want to be careful doing that in random areas. You know what I mean? So random area would be say this setup occurred, this Dumb and Dumber setup occurred in the middle of a balance area, right? Of course, I lost my chart like I always do. Here we go. So say this was right in the middle of this guy. We came up and there was a stopper like right here. Well, that's not, this is nothing. This is right here. That's not important. This is important. That's where you can be aggressive with the zones, right? But like if I tell everybody that, in my room and everything is where you don't want to be aggressive until you understand what's going on. And then you come up with a trade plan and
S&P Icebergs by ES 701 contracts.
Here we go. I can potentially trail this again. But you want to come up with rules. You're like, okay, I trade these conservatively. I trade them the way Scott trades them, unless A, B, and C, and D are all lined up. Then I get it. Then the minute I hear something, I'm in. I'm fine with that. But you got to be consistent. Let's see what's down here. So this I'm not going to draw because I've been burned doing this. I know these are two spikes, but I don't like these are close enough together you could draw it, and it's because it is threshold if you add these together, 329, 388, it's barely 700, and it's kind of spread out. I'm not going to draw this. I want to see, it's mostly Nasdaq where this is burning me, where I kind of piecemeal, like the one day it was like 60 stops and then 90 stops, and I put them together as the zone, and it just didn't respect it, right? So what I want to see in my areas, at least one of the spikes be close to threshold. So say this was like 500, and then I had another 300, then fine, then I'll draw it. But not to barely get to threshold. My threshold's 700. This is barely over 700, so I'm not going to draw that. It's not a huge deal. It's close enough to this anyway. So basically, I'm not going to trail my stop based on this new stuff, is what I'm saying. All right, so that gold trade, we got an ATR above there, so I canceled that. I don't know if you guys saw that. So this zone is not valid anymore. We got an ATR below it and above it. Right? This is a stop run. We got an ATR below it and we got an ATR above it. No go, I wait for something new. Especially in this clown market. So crude, remember I was saying I don't want to get long. Yeah, it just moved up a little bit, but you see it's just struggling up here, right? Filled this liquidity. They got their fill. Let's see if we got any new lugs. I bet you we did not. Oh, we did. Good. Well, could potentially go long this now. I'll definitely, if the new setup comes in, I will go long this. But again, this is not a great place to be going long. I'd much rather see it. I would love to see a short setup in this market, just like in ES. If I get a short setup here, what I may do, I may get in aggressively. Like right when I hear it, just because, like I said, this led to this $10 down move, bottom of this balance. This is not a place you want to be getting long. You could, if the volume tells you, yeah, you could. The volume is king. But I like when everything lines up, and lining up to me is not a long right now in this market. So, and it's hard enough to trade as it is with all the war headlines. All right, so look at that. I mean, if you would have just said, wow, Scott has me sold on this zone, I hear, oh, there's the stops I'm in. And this is a 30-point trade, guys. Like, this is, I'm telling you, you guys have the edge. This is the ultimate edge in trading. It's not always black and white. You've got to know where your areas are and know, like I said, there's going to be times where you want to be long and not go short, things like that, but it doesn't get much better than that. I should have put one on there, at least one, probably two, and just risk an ATR above there. But again, I'm trying to be consistent for the newer people on here. All right, Bruce, we're out of gas. Any questions?
Yeah. So there are questions about you had mentioned something about the trading combine or something last week.
Oh, yeah. Thanks for reminding me.
Web traders asking about that a few times in here.
Yeah. So let me, so if you go to my website, I think this code, well, so let me start over. So I was sent something, so the Tick Strike guy, this Amar, I'm sure you guys know him if you have Tick Striker, he runs Financial Juice too. He sent out a webinar a couple months ago about this Apex funding, right? So Every time, this is just like a setup occurring. I was just about to get off. Now this is going to be like a 20-minute story, but it's fine. It's to your guys' benefit.
You could cover it next time if you like.
No, it's fine because I know you guys, a lot of you guys have been waiting for me to talk about it. So remember when I got knocked out of the game in about 2006, 2007 because of I had made millions of dollars and overnight couldn't make a dollar. Literally overnight. Like literally one day I was making 50,000 a day and then I came in, couldn't make a dollar. So there was a lot of things involved in that. It was a low volatility at the time. It was the manipulation by, I tell you guys about the guy I used to go head against all day long. It was just a perfect storm for me. It wasn't perfect. It was the worst thing that could have happened to me. I couldn't make money anymore, right? So anyway, I hung on for another, 6, 7 years trying to reinvent my style. Obviously, if I would have had Bookmap, none of that would have ever happened. Thanks a lot, guys. 15 years too late for me. It's not too late. It's never too late, obviously, because here's my comeback. But my point is, I hung on for about 6 or 7 years and I had to get out of the business right around 2013 because I just could not. I mean, I was at best a mediocre trader. Why was I a mediocre trader? Well, I knew this stuff. The whole reason I'm telling you now. This is great to know and people can see and then head and shoulders and all this other stuff, right? That's easy to see once you learn technical analysis. It's not enough. It's not the full picture, right? So I was at best average and I was not making enough money, especially, not really working for a firm or anything. I was trading my own money. I couldn't survive. So I had to leave the business in 2013. You guys have heard this story, I know, but for the newer people. And I had tried, right before I left the business, I went in medical sales for a few years so I can support my family. But before I went in there, I tried. I'm not even going to say the name of it because I'm going to kind of besmirch it a little bit because, guys, most of these funding companies, and now there's a bunch of them, right? Again, I'm not going to name them all, but you guys know where they are.
Yeah, please don't name them.
I'm not. I'm going to name the one that I'm doing that I did for you guys to kind of show everyone. But anyway, the one was I did it. So I did the combine, passed the combine. Then I'm like, oh, now you have to do a live combine. I'm like, well, what the hell is a live combine? I thought I just did a live combine. It was live trading. So then I passed that, right? So this was I'm doing air quotes, $150,000 account or $200,000 account, right? So when I hear $200,000 account, I'm thinking like a trading firm. I can lose $200,000 before I'm fired or cut off or whatever. So pass the first thing, pass the second thing, and then, okay, you're live. So now if you go down $2,000, you have to go back and redo the combine, blah, blah, blah. I'm like, well, wait a minute. It's a $150,000, $200,000 account. That's not a $200,000. That's a $2,000 account. Like, what are you like? What? So I blew out in the first like 3 days. Like you're trading, and this is before micros, right? So you can lose $2,000 easily, as I'm sure most people on here know, trading one E-mini S&P, right? Especially in this volatility. So it's like I blew out right away. It's like this is not it. This is nonsense. So obviously, guys, you've got to understand most of these funding sites are geared towards what? 95% of traders fail trading, right? So what do you think their model is based on? You think it's based on funding traders, or do you think it's based on collecting fees from you? I'm going to say collecting fees, and I know it is, right? So I've always shied away from them. So that aside, they are still, no matter which one you do, it is still a viable option as you learn, so you're not losing your own money, because a lot of guys can't trade sim and make the same decisions because it's not real money, right? And I've always been opposite because for me it's been about being right and wrong. It's not about the money, right? And that's why I was able to turn into a huge trader, because it didn't matter to me whether I had a 1 lot on or 1,000 lot on. It was being right or wrong that made the difference for me. So, but a lot of guys, they don't think the same way. They like, oh, this is a sim account. Who cares? I won't even put a stop and I'll just let it come back. And then you have like these miraculous winning days and stuff, right? It's not like real money. When you do these funding accounts, no matter which one you do, you have to pay for them. So it's still like you have skin in the game, right? So it is a viable option where you're not, if you blow out of the combine or the trial period, you lose your entry fee, whatever, $150, $200. It's better than losing 10, 20 grand. Right? So they are good for that aspect. Absolutely. Right. I 100% recommend them. Hold on, let's keep an eye on this. How was that area up there? That zone and the stop run and the dumb and dumber? How'd that work out? Pretty good, 40 points. All right, so I'm gonna add to this trade too, as long as nothing comes in here. Let's see, do we get that? Looks like an ATR. Let's see here, 15.16. So the bottom of this zone was 37. So we need 2175 for a full ATR. So if this goes ATR, retest failure, I will add to this. Let's just make sure we're not in an important area where I want to maybe cover one of these. Hold on a second, then I'll get back to my story. There's nothing important here, so I'm holding it. The only thing that I see important is the top of a market profile composite from a year and a half ago. So that's not enough. So if this, I will get out at, especially Confluent. So I don't usually get out of VWeb by itself, but if it's Confluent with something else, which it is, yellow lug, if this swipes down here, I will definitely get out of at least one of my contracts, right? Other than that, I'm holding it, and so it swipes down, and you can see this is a prior zone too. Did I delete the one side of it? I think I did. I can't remember what this is. So anyway, anywhere down here in this 15 to 12 area, I will cover at least one of these. It may not even get down there right now. I may do its usual. I want to see at least an ATR and retest and fail, then I'll add to this. So what did I say it was? 42. Oh, wait. What was the bottom of the zone? 37 and a half. I need, what did I say? 21. I said 21 and 3/4, right? Or a full ATR. So we're almost there. All right. So while we wait for that, so all those funding companies are a viable alternative as you guys learn to trade, so you're not blowing out accounts, right? Especially as you're learning anything. This way of trading, which is the way of trading, at least the volume. Okay, I'm not saying my exact method is the way of trading, but if you don't have the volume, you don't have all the information. I don't know if I ever mentioned that. By the way, that's the ATR, so now retest fail, I will short this. If not, I'm going to put this in just in case I'm talking and miss this. I'm going to put it in just above this, so right around 15, because that's right where that other zone was that I started to delete. So I'm going to put a one lot in right here to cover, and then I'll add if it goes back and retest that. No, I'm going to get out right there. A second. Put in my other accounts here. I'm just going to get out of one of my other account right now because I'm not going to be able to watch everything. Okay, so anyway, viable alternative. So this Amar guy who runs Tick Strike, who's I trust. I've been using this Tick Strike for like 12, 13 years, right? So and he obviously has this, he knows what's nonsense, what's not. So I watched this webinar on the funding because I know I got a lot of my traders in my room always asking me about it too. So I just never really recommended one as far as real funding because what I just talked about. So he talks about this Apex futures, and I literally watched the webinar. I sent him an instant message through Skype. Hey, is this legit? He's like, it's the most legit funding thing I've ever seen. Right? So I said, well, you know what I'm going to do? I'm going to try to qualify. Not try, I should qualify being a professional trader. It'd be pretty sad if I couldn't qualify. And I'm going to do it. And then if they do everything they say they're going to do, and it's not a bunch of nonsense, not, hey, you passed the first one, here's the second one. Oh, you passed that one. Okay, here's $600 you can trade with. I wanted to make sure everything was on the up and up. And then I would tell you guys about it, right? Because, again, it's always better to trade with someone else's money. It takes a lot of pressure off you if you're not trading your rent and your support of your family. You don't make the same decisions if you're afraid to lose. If you're afraid to lose in trading, gambling, anything that you do, you're going to lose, right? So that just is going to help you not be, where you can trade and just trade and not be worrying about paying your rent, right? So anyway, for the last month, I did it. So I went into this thing and so let me just show you real quick. Let's go. So you can find, you get the discount, go to my website here. Go here. I think this code works. They sent me a different one today. I don't know what they're doing. They keep sending me different codes. So just click on this. And so you go in here and I went to this one. This is the one I did, right? I did this one here. So if you do the code, you get this for half, which is a good deal, especially just if you're practicing, right? Even if you don't even care if you qualify, right? So I did this one. So there's some things you need to know about this, right? So when I was in this, you get basically a $5,000. See this trailing threshold. This is a big deal. People don't realize this, right? So before I even get in this, I'm doing a webinar with them. I just talked to them yesterday. We're going to do a webinar or 2 Wednesdays from now. I'll talk about it next week too, because I want to go over my experience and they're going to tell you all about it because there's things you need to know. So this is important, right? So first one I did, I went up $7,000. The threshold, you got to make 9. I went up $7,000, right? Over like probably 2 or 3 days. Then I had drawdowns, which happens all the time. If you guys want to see a drawdown, a kick in the sack, part of my language, drawdown. This is a drawdown. This was last week. If you guys remember me telling you on the webinar, this day was my first, from here to here, that was my first tilt day I had where I hit my limit, my daily loss limit, in like 4 years, right? So I touched a high of 49.4. This was that last Monday. I took a beating that day, and then I got smoked this day. That was my loss limit. You can see it's $10,000. Lost that, right? So you're going to have drawdowns, and you can see, and then if you're consistent, then it starts to make its way back. This is called the trading curve. This is what your P&L is going to look like, right, over the long run. So anyway, I had the drawdown. I was up $7,000, and I had the drawdown, and then so I lost back, and it wasn't all in one day. I lost because it's trailing. So if you make $7,000, so now at a $2,000 profit. So my account size was 152,000, where my drop dead now moves to. So even though I was profitable, I came back, I pulled back $5,000. I'm out of it, right? That's what makes this tough, because if you have any kind of drawdowns, you can be up. Like I said, I was up $7,000. I was still up. I had the drawdown. I was still up money trading on the thing, and I blew out of the thing. I'm like, well, that's not cool. I didn't really understand that when I did it, so that's what I'm telling you guys. So I did the next one. I went up $4,000. Had another drawdown, pulled back, and I was down just $1,000. Blew out of it. And then the third one, this is all within the last month. Third one I qualified, so I qualified. So what I wanted to make sure of is when I qualified that they did, like I said, what they said they were going to do. And so I qualified. It takes like the day for them to get the reports from Rhythmic and everything else, because you can trade through NinjaTrader, Rhythmic, and a couple other ones. I don't think maybe you could trade through Bookmap. Actually, you can trade through Bookmap.
Yeah, you can trade
you
through
don't get to see
Bookmap.
the MBO data, so you're not seeing the full order depth look. So again, they'll talk about that on the webinar.
They should.
So anyway, so I qualified, and within 24 hours, they had me up and running live, and there I go. So it's the same. It's not 150,000, but they do. As far as it's the same thing as this. So right now, I'm live, and if I go up, the one great thing about this is it stops trailing once you start at 150,000, and then if you go up, say you go up 157, well, the most it trails to is 150,100. So if I go up to 170,000, make 20,000 profit. I can give back 20 grand instead of 5. That's the difference in the live. So again, they'll talk all about it. I don't claim to be an expert, but I wanted to tell you guys about it because it's legit. I haven't been paid yet. That's the one thing, and we're getting a retest of the zone, by the way. And of course, I didn't film me on my one lot, but I will add to this trade. I haven't been paid real cash yet, but just the very beginning of it, from what I went through in the past, it's legit. So I would never, ever, ever, ever back anything that was not legit. So you can get the discount on my website. I just showed you that, and I'm going to do a webinar 2 Wednesdays from yesterday. I'll talk about that next week. So that's what I was going to tell you guys about. It's a viable thing just to practice. If you just want to practice, it's not, and you have some skin in the game. So it hurts if you lose it, because no one wants to lose $150 to get in the thing, right? But so that's it. Hopefully that's helpful for you guys.
Just a note on
I've seen it, done it, and that one's legit. So
Okay.
hopefully that answers. Don't ask me a bunch of questions about it. If you want to email me something, I'll again, I don't know the ins and outs of everything. You go on here, and they have all their FAQs up here. Just go on this thing, and they have all these videos, and look at all these things. You got all this stuff, right? And they got videos and blah blah blah. So that's it. That's what I was going to show you guys. And that's right here. You got your Bookmap deals here. Here's your Trader Sync, which this is this. You guys should be using. Everyone should be using something like this. This one's the best one I've seen. There's discounts for that. Discounts for Tick Strike, Spot Gamma, and then the Rhythmic stuff. So that's all on my website. All right. Any other questions, Bruce? I'm not going to answer a bunch of questions about this stuff. We'll do that on the webinar for the Apex stuff. But anything about the trading
Yeah,
before I hop off here?
Scott, I don't think you can hear me correctly, or can you? Hello? Anyway,
Bruce?
yeah, I just texted you.
Oh, I'm sorry. I had you turned down. Sorry.
Okay, there we are. No,
Sorry.
just a note on the all of those all of those services are using Rhythmic. Because Rhythmic has really good paper trading functionality, and so you'll get MBO data through Rhythmic regardless. So you'll be able to use Bookmap. So if you want to use Bookmap with any of those services, tell them you want to use Bookmap, and get them set up. Have them reach out to me or Bookmap, and we can help them out there. But Rhythmic is Rhythmic. That's it. So that's a boon for you guys if you want to do something like that, because you'll get the MBO, and that's an edge. Yeah. Anyway, I think that's it, Scott. And I put your contact information there in the chat, so if anyone wants to reach out to you.
Okay, let's just wait a second here, see if I get filled.
One thing, if you guys like these videos, please hit the like button or the thumbs up, and this is it makes a big difference for us. So yeah, please give us a like, and that helps us move forward with more of these kinds of events.
Absolutely. How could you guys not like this? Like, this is it, guys. I'm telling you. I'm dead serious. I know I'm doing a book by Weber. I've been doing it for 3 years, and there's a reason I'm doing them. Because just like I was saying with the Apex and everything else, I do not promote something unless I 100% believe in it. And I'm telling you guys for the 1000th time, you do not get, this is the absolute single best edge you will ever have in trading. I don't care what you are using. Nothing beats this Bookmap, seeing the market traded bubbles, seeing the liquidity, and most of all, the SI indicator. It's like I tell you guys all the time. When I got back in the business in 2017, Dr. Brett Steenbarger, he top trading psychologist on the planet, called me up and said, "You need to look at this Bookmap. It reminds me of how you used to trade, how you used to view the market." And the minute I saw it, and this was even before all this stuff, I'm like, I'm back. Then they came out with this, and my first few webinars with Bookmap, you can go back and watch them. They were just on stock trading because I was not going to trade futures. I was so jaded, PTSD from making millions of dollars to getting knocked out of the game. I'm like, I'm not trading futures. I'm trading stocks. The second, and Bruce had told me about this for like 4 months, this stuff, this SI indicator, the CME MBO data. The second I saw this, I'm like, I'm trading futures again. This is the most powerful thing I've ever seen in my life. And 3 years later, it's still the most powerful thing I've ever seen in my life. So I'm probably gonna pop out of this. Just, I don't want to, if they're hammering these stocks, I'll hold on and see if I get my fill, but I'm not going to mess around here for a couple points. I'll get out of one, like that nonsense. See how, of course they sense my one lot, my big one guy scaring the market. Come on, you can do it. You can do it. Come on.
It'll hit you.
This is what I go through. Hey, ooh. All right, so now I'm going to keep this one on.
Gold stocks LGC, 240 contracts.
There's no way I'm going to cover that right now. That happens every time I try to have the webinars, by the way. So this was close, and the reason I got out of that one was because we were close to VWAP. I could have waited a little further, but again, it's not worth 3 points. I will hold this now. So I'm still watching that zone. If nothing comes in here, if we retest that zone, fail, I'll put 2 more back on. Or I'm holding this to either, my ultimate goal is the blue lug, but if something new comes in, a new setup and it's bullish, then I'll get out and potentially go long, because now we're out of that zone. But how important was that zone? How important is it to know, whoops, hold on, what did I just do there? To know these areas and then get your volume set up. It doesn't get any better than what we just saw. Dumb and Dumber, stop run, one of the 6 setups, boom. That's what, 45 points and counting? It's coming all the way back. So if we come back, you do want to watch, this is current stuff. You want to watch this area, because this is what led to this directional prediction. It's not as important as this one, but it's still important. If we break that, then we're coming down to this stuff. All right, guys, hopefully you learned not a ton of trading, but that's part of trading is being patient, right? And then, yeah, that's about it. So hopefully you guys learned something. All right, Bruce, if there's no other questions, I'm gonna hop off. I'll see you guys next Thursday.
Yeah, no, I'm just saying, apologizing for if we didn't get to your questions here. We've got to jump to the next live event with Tom B. So you guys, I put in Scott's information into the chat. If you want to reach out to him directly, you can. And his website, you've got his YouTube, his email, etc. in there. You'll see it all. So yeah, take it from there. Yeah, no, thank you very much, Scott. Great trading here. Some nice, beautiful little setup, beautiful big setups for you. Just 40 or 50 point move there in the S&P. Pretty
Right.
nice.
And it could even be even better. Like I said, I could have gotten in aggressively up here. I didn't, but that's just good information for you guys. You may say, hey, when everything lines up, I'm in aggressively. But guys, I'm telling you, this is it. If you get, how many guys got short there at the bottom of that zone and had to endure? They probably got stopped out, and we waited, right? I waited. I was waiting for a setup. We got it. Pulled the trigger. Boom. That's trading. Half of it's waiting, right? So, and like this is before I hop off. This is the market condition, guys. So you get these ridiculous swipes up and then give them all back. Ridiculous swipes up and then give it all back. Right? So, all right. We'll see you guys. I do this every day in my trade room too, so feel free to come on over. See you guys next Thursday. Thanks,
Okay.
Bruce.
All right. Thanks, Scott. Take care, everybody.
Appreciate it.
Bye-bye.